Is it okay to let your bank pay your real estate taxes and your insurance? What is happening, YouTube? It's Matt Faircloth. Thank you for watching my Mentorship Monday program. My name is Matt. My company is called the DeRosa Group, and this is our Mentorship Monday program that you're watching. It goes down like this. People email questions to helpme@DeRosaGroup.com. That is helpme@DeRosaGroup.com, DEROSA, DeRosaGroup.com. And we will email those, we will answer those questions right here on the YouTube channel for you and everyone else to learn from, okay? So submit those questions. If it's a great one, we'll put it right here on the YouTube channel. We'll even give you a shout out, like I'm going to give a shout out to Todd. Hi, Todd. Thanks for your question, Todd. You don't say where you're from, Todd. I'm not going to say your last name because I don't want to put you out there like that, but Todd has a great question. Todd says, hey, Matt, your channel is awesome. Thank you, Todd. Thank you for doing the Mentorship Monday videos on YouTube. Well, you're welcome. I bought an out-of-state duplex because prices in my area are way too high. My plan is to double my portfolio of buy and hold properties every couple of years, depending on the market. Doubling your portfolio every couple of years is a really, really good strategy, Todd. It's smart growth, not explosive growth, and it's a good way to grow into high net worth through real estate by doubling your portfolio. You put every couple of years. You could probably be a little more aggressive than that. I tell people sometimes if they want to grow aggressively to double their portfolio every time they do a deal, right? So start at 1, then you go to 2, then you go to 4, then you go to 8. Then you go to 16, then you go to 32. It grows pretty quick. So every couple of years is maybe not as aggressive as you could be, Todd, so I'll just throw that out there. That's not Todd's question. My question, and we could do a whole thing, a whole whiteboard session on the whiteboard over here on how to double your portfolio. So if anyone wants to submit that question, I will gladly tackle it for you here on YouTube. Yet, let's get back to Todd's question. My question is, should I opt for an impound account? And I'll get to what that means for my lender when I buy rental properties. So then Todd goes in to talk about LLCs, which that's another thing that we can get into. We've answered a lot of LLC questions here on YouTube. You guys love to talk about LLCs. I'm glad to talk about them all y'all want. So what Todd's asking for on an impound account is that is where a bank, your lender, a commercial lender, will take part of the monthly payment that you pay them and pay your real estate taxes, your insurance with them. It's called, some places call it escrow, where you take money in escrow each month. So let's just say your real estate taxes for round numbers are $12,000 a year for a rental property. That's $1,000 a month. The bank will take an additional $1,000. You'll pay them an additional $1,000. To them, and they'll take that money and they'll escrow it, and then when the timing is appropriate, they'll pay your real estate taxes for you. So it actually increases your monthly payment each month, but it stops you from having to write big checks. Instead of having to write like a $12,000 check once a year, you pay $1,000 a month to your bank. It's called escrow. It protects your bank. Now, it protects them because they know that you're paying your real estate taxes because you're paying it to them first. Unpaid real estate taxes are a major risk to banks, just like unpaid insurance is, because if a property goes uninsured, then it could burn to the ground and they have no collateral against their insurance aside from a burnt up piece of earth. Whereas if you were insured, the bank could go to that insurance company, ask them to reimburse them for rebuilding the property, because the bank is going to require that you list them as additional insured on the insurance policy, which means that if there was a claim, the bank gets protected as well. That's why they want insurance. Real estate taxes are, if you don't pay your real estate taxes, in almost every state in the union, real estate taxes have precedent over the bank loan, meaning the real estate taxes can foreclose and wipe out the bank loan in so many words. It's way more complicated than that. But they take precedence over bank loans in the way that properties get paid off, right? When they sell or when they foreclose or anything like that. So it's very important for banks to make sure your real estate taxes and your insurance get paid. Now, maybe that's good for them. Here's what's in it for you, my friend Todd. What's in it for you, Todd, is that you are normalized on those expenses, meaning like your expenses look like this. It's going to be $3,000 a month, and that $3,000 includes your real estate taxes, your insurance, your principal, paying that mortgage down a little bit, and interest on the loan. They're all lumped into a nice little package. I wish in some ways banks would escrow for more things. Could they? I mean, on big property, some apartment buildings we have, banks escrow for a little bit of a maintenance reserve. They escrow for other things, for just reserves that you need to have set aside for your property. Yes, it ups your monthly payment, but you know what it also does? It creates a nice little cushion of stability for your property, so that your monthly payments are this, instead of one month you pay $3,000 a month, the next month you have to pay that $3,000 for your monthly payment, and then another $10,000 for real estate taxes. And if you're not smart and you don't save up, then that could blow out all your savings if you don't expect it. So it's a good way to normalize your expenses and make it nice and predictable across the board. So I recommend yes. Not all of our properties that we own have escrows in them like this, because a lot of banks don't want to do it. They're not set up to do it for you, but if they offer it, take it. So that's the answer to your question, Todd. Again, help me at DeRosaGroup.com if you guys have real estate questions, and I'll answer them right here, right now on this YouTube channel for you guys to check out. Go to DeRosaGroup.com and check out more about our company, and you can hear about all kinds of cool stuff that we've got coming in the pipeline, including DeRosa Insiders, which is direct access to me, direct access to all kinds of the cool stuff that we're up to here at the DeRosa Group, and you can see some of our properties hands-on as well through DeRosa Insiders. You guys want to check that out too. That's what I got for you today, guys. Have a great and profitable week.